Hello everyone, welcome back to the channel. So today, as promised, I'm going to go over the Schwab US Dividend Equity ETF more in depth. And I had talked about doing this a couple weeks ago on a video that I did, but what really intrigued me is I've seen a couple other YouTube videos about this, and apparently before I came into the financial space on YouTube, this was actually one of the most popular dividend ETFs being discussed on YouTube Finance and other areas, of course. But I want to talk mainly about this one, and there's another one called the Vanguard High Dividend Yield Index Fund, VYM, that I might discuss also. But mainly, I'm going to focus on the SCHD fund. So this fund has been around since like late 2011, or yeah, late 2011, and it's basically tripled in value. Um, and this isn't really one that just looking at it at first glance pops out to me in terms of its dividend prowess because it's a 3.26% yield. But looking at it overall, based on how it's performed, going steadily up over time, combined with the dividend that it pays, it's done pretty good overall as a combined fund. So I set up a free account on this site called Stock Rover, where I'm going to do some analytics of the fund here. But also, what I found on Stock Rover is very similar to what TD Ameritrade offers. And as I've talked about before, but didn't want to do on some of my prior videos due to the time or time constraints, um, I didn't want to go into TD Ameritrade then or log into it during the video. But I actually went into it today, and we'll go over some of the analytics there because Ameritrade's portal actually offers some really good analytics free for any customers there. So I'm a big fan. But let's start with this Stock Rover site here. So this is the Morningstar rating of the fund. It's a 5-star fund, which is doesn't get any better than that. That's the top rating from Morningstar. Expense ratio 0.06%, and that's for every $10,000. I believe you pay $6 in expenses, which that's phenomenal. Asset turnover ratio 46%, and over 5 days it's dropping, so it might be a little bit of a discount. Of course, the market got hammered Friday, which I wanted to do another video on. So yeah, want to keep the video schedule up, but I've just really had a lot going on lately, a lot behind the scenes. Unfortunately, I'm not a full-time YouTuber yet. But those of you watching, maybe you can help me with that. Who knows? Anyway, this is the 5-year performance of the fund, and really pretty good. These are the top holdings of the fund. So it's 99.2% U.S. stock, 7% non-U.S. stock, 20% financial services, 16.5% technology, 16.5% industrials, consumer defensive, healthcare. Pretty good balance overall if you compare it to like the sectors of the S&P. Dividend again, 3.3%. Trailing 12-month yield, 3.3%. So it hasn't dropped. It stayed steady. Dividend per share, $2.43. 1-year change percentage, 30.4%. 3-year average percent, 18.7. 5-year average percent, 16.3. Wonder how it's coming up with that. Top holdings, Texas Instruments, Pepsi, Cola, Verizon, Home Depot, Cisco, Amgen, Merck, Broadcom, Pfizer, and IBM. Those of you that follow me really close know that I got out of IBM in June and balanced into more. Actually, I balanced into some LEAP options in the Roth IRA, and I got some more dividend ETFs as well. Some QQQX, actually. Cisco, I'll do a video on this one day because Cisco, I think, is one of my best stock wins of all time. But I've been out of the position since 2019. I tripled my money in it, and based on my own internal analytics, I just determined that it was time to sell it. So I cashed in a nice long-term gain there, and I'll cover that eventually because that's one of my best wins of all time. I'm a big fan of Cisco, and I was actually looking at getting back into it one day, but haven't really decided whether I want to or not. And I've kind of got all my money allocated right now. So anyway, so this is that. And I do have some spreadsheet analysis, and this time I did it because I'm having to use StreamYard instead of Zoom. I'm actually out of storage on this stupid MacBook. So 2 years later, who knew that would be an issue? But anyway, we'll get into that next. Let me see if Ameritrade had any other nuggets of wisdom. Oh, this is what I like, this growth of $10,000 chart. over the last 5 years. You can see if you had invested $10,000 in 2018, it would have doubled by 2022 in 4 years. Actually, if you see the beginning of the year, that's when it actually peaked, and it's fallen back since then. So let's see what they say here. The following 4 ETFs were chosen for their similarity to SPY. Your selected fund. Wait, hold on a second here. Did I type in the wrong thing? I haven't been feeling too well today, so I apologize if I'm a bit off my A game here. But I'm doing my best to get this cranked out. SCHD. Wow, that was silly. I had the S&P 500 typed in. Unbelievable. Okay, let's try this again. So, growth of $10,000. Oh, what do you know? I mean, it wasn't far off. Very similar to the S&P 500. It doubled by the beginning of 2022 and hasn't fallen off that much. So if we look at the total return, what it tells us here, this is showing 100%, but I think it's closer to 200 or 300% with dividends reinvested, and that's what I'm going to show you next. Let's look at since inception. This is saying 14%, and this is like annualized. 10-year return 13.49, 5-year return 13.74. So the 5-year return is beating the 10-year return. 3-month return negative, 1-month return year to date. Yeah, of course everything's negative this year, unfortunately, except for our outlooks and our attitude, right? That's how we need to be, positive. Ratings and risk. A Sharpe ratio. Oh, I haven't seen this since finance class. Sharpe ratio of 0.83%, expense ratio of 0.06. I won't bore you with all those technicalities. Asset class. Yeah, we went over this on the other one. Fees and management. Cost analysis. Hypothetical example. Fees were calculated assuming an initial investment of $10,000, followed by additional reinvestments of $2,500 every year for 4 years. So this is what it would cost you. It's actually pretty cheap compared to the peer group that Ameritrade picked for us. And I really like that about Ameritrade. So they automatically picked a peer group. So when we're doing research in finance, it's important to analyze a fund or a company in comparison to its peers. So I really like how Ameritrade automatically did this for us. You can see this is actually the cheapest in the peer group compared to the iShares Core Dividend Growth ETF, Invesco, 2 Invesco funds, and then another iShares LRGF. 4 of those are 5-star rated. 1 of them is 3-star rated. Let's go back to summary. Okay, see that? Let me just click this for fun here. Oh, I'll look into this later. Anyway, let's go to the sheet I put together here. This is a Google spreadsheet. And basically, I took what I had in Excel before because Excel wasn't cooperating with me. So these are the historical dividends that this fund has paid out every month since inception. And that's quite impressive. I think they only missed a couple funds or a couple months. But basically, this fund since 2012, almost 10 years now, has paid a monthly dividend every month. So what I want to show you here, if this fund had stayed flat, basically this is what you would have in terms of just dividend growth alone. So you can see in 10 years, you would have grown $7,777. Good number. All sevens. It's a good number. So 17,777. So it's almost doubling in just 10 short years. So let's do this. 7777 divided by 10. And that's an easy one. I just want to have it here. That's 77.77%. Lots of sevens. So I would say you can add this to the return, and you can see what I wanted to do here, but I didn't quite get to it. Well, let's just do this here. You know what? While we're live here, if the fund has averaged 14% a year, we'll just impute this for now, and then that's phenomenal. Wow, it's going to blow minds when I get this fleshed out here. So what I'm planning to do here, combined growth, okay. Let's do this. Not sure if this is going to be right or not, but this will be a decent crack at it. Times 1.14 plus 1.0391. That's the dividend yield. See what difference that made. Look at that. Oh, wait a second. That can't be right. Okay, I'm gonna try something a little bit odder here. I'm gonna try to just add the dividend yield. So if it's 1.14, we're gonna add the dividend yield to get the total return. So 14% plus 3.91 is gonna be 17. I think that's right. Let's see. So see, I screwed it up before. Okay, so it makes a $300 difference the first year. Hold on, just ignore that. Okay, so the first year, you can see if I go back twice, see 11,400 in the first year. Ignore this because that we screwed up. 11,791. So 391. So that's before compounding in the first year. That's like simple return. That's easy math. You're adding $391 to the return. But now what we're going to do, year two, and we're going to go all the way out to year 10. Wow. So do you see that at the end? That's the difference that the dividend yield makes. So when you're reinvesting the dividends, you just added like another $40,000 return over 10 years. See that? 76,000 all the way to 118,000, over 40,000 return. That's phenomenal. So each year, you see what the dividend impact is doing when you reinvest it. So that's more than a 10x. That's actually almost a 12x of your money in 10 years. That's pretty good. And for a pretty stable fund that keeps growing over time. So I think I may look into getting into this. I mean, it's like shopping on Amazon, except you're shopping for funds. Like I'd like to buy everything, but I only have so much money to spend. So when I go shopping for dividend ETFs, which I actually, funny thing, I like shopping for stuff that makes money better than I do stuff that is like a loss. Like when you go to the store, when you go buy stuff, it's like depreciable assets. So I'm kind of I'm kind of a nerd like that. Like instead of going to buy, I don't know, beer or wine or some like food I like at the store or clothes or whatever. Um, I actually I have more fun, I think, buying into dividend ETFs because they make money, and I like buying stuff that makes money. I like buying stuff that generates a positive return. So with that, but the thing is, even when I shop for that, um, I still, until I get returns like this and everything, of course, I can't really, uh, I don't quite have unlimited funds to just go buy everything I want. Otherwise, I would do this right now. So that's what I'm going. That's where I'm going with that. And then Vanguard, for those of you that like Vanguard out there, there's a comparable Vanguard fund that pays a 3.01% dividend, which is already lower than the other one. And this one's only doubled. So it has the same expense ratio, but I can already tell you just looking at it, not that I dislike Vanguard or anything like that. Some people love them, but I'm kind of indifferent between like, Fidelity, Vanguard, and the others. They all kind of have the same stuff. So I like this one of the two better. So to me, just looking at that, it's not much of a comparison. And really, that's about all I had for that one. I really like it. Hopefully, that was in depth enough, and hopefully that covers what people are looking for. If you like that, please remember to like, comment, and subscribe. And thanks so much for tuning in. And keep an eye out for my next videos.